Welcome, everyone. Good morning, good afternoon, and good evening to all our friends, clients, and associates. We're very, very excited for this session. This is our 8th webinar session thus far in our series of Interfor Academy, and most of the other previous recordings can be found on our website. We're very, very excited to welcome Jiri Krol and also Anthony Scaramucci, who is logging in as we speak.
I apologize, guys. I had a login issue, which I hate doing. Can you hear me okay?
Yep, you're all good, and we're
so
live.
Sorry, but I'm 2 minutes late. I'm sorry. My assistant just left to help me figure it out. I apologize.
Not a problem.
Okay.
Just welcoming everyone to our 8th session, and it's going to be a very, very exciting session for us. Again, welcoming Jiri Krol and Anthony Scaramucci, and hosted by our very good friend and the head of Interfor Academy, Jeremy Hurwitz. And I'm also going to announce now that we have on June 4th our next session on threat monitoring. And we're going to be joined by the former director of the U.S. Secret Service, Mark Sullivan, who is a longtime friend of the firm as well. And we'll be talking about threats, how to deal with threats against executives, social media monitoring, etc. And I'll be a co-panelist on that. So with that, I'll be dropping off now, and I'll turn it over to Jeremy to take it from here.
You mean we're not going to be able to look at that beard for the next hour? No?
You know what? I'll send you a
Right.
picture, Anthony.
Okay.
It'll always be there.
Send me a picture, okay? It's impressive. Some of us have beard envy. I don't think I could grow a beard like that.
It's part of the uniform of Interfor. Thanks. You're on mute, Jeremy.
Sorry about that, guys. I was just saying, Anthony, Don will be back at the end, so you'll get another look at the famous beard. It's great to be with everybody here today. Very excited about this discussion and want to quickly get started. But let me do a brief introduction of our two esteemed panelists today. Anthony Scaramucci is the founder and managing partner of SkyBridge, a global alternative investment firm, and he's also the founder and chairman of SALT, a global thought leadership forum and venture studio. He's co-host of 2 podcasts, The Rest is Politics US and Open Book, which I am pleased to say I was a guest on and had a really great conversation with Anthony. And he's the author of several books, including The Little Book of Hedge Funds, which, Anthony, I'm reading right now and enjoying. And prior to founding SkyBridge in 2005, Scaramucci co-founded an investment partnership called Oscar Capital Management, which he sold in 2001. And earlier in his career, he worked at Goldman Sachs. Anthony served, as we all know, on President Trump's transition team in 2016, before serving briefly as the White House communications director. Hi, Anthony. Thanks for being with us today.
Hey, really, really, really good to be here. Thank you.
Great. And we're also with my old friend, Jiri Krol, who is Deputy CEO and Global Head of Government Affairs at the Alternative Investment Management Association, known as AIMA. Prior to his role with AIMA, Jiri worked at the Czech Securities Market Regulator and the Czech Ministry of Finance, where he led the financial services work during the first Czech presidency of the European Council. Jiri also spent several years at the European Commission, working on the negotiation of the Financial Market Investments Directive, implementing measures and coordinating Commission's policy towards the Financial Stability Board and the G20. Hello and ahoy, Jiri.
Nazdar, jak se máš?
I might practice my rather bad Czech with Jiri here and there, but we'll keep it mostly to English. But honestly, so great to be with you both. We're all very lucky to have such informed panelists to discuss the extraordinary state of the markets here. And that's really where I want to start things off. I would love to just kind of get your general view of what we've been living through over the last couple months, and especially in recent weeks with market turbulence. So just give us your thoughts generally. I'd ask you to keep it kind of backwards looking and up to the moment, because I do have a question where I'm going to ask you to look forward. But, Anthony, I follow you very closely on Twitter, so I'm getting your updates daily. They've helped me understand the market. Why don't you just give us your thoughts, if you would, and kick things off on how we got here and what it looks like today?
Well, I mean, it's a super broad question, so I'm going to narrow it a little bit and you'll get a chance to chime in. But I would say that we are in a debt crisis. It's not just a U.S. debt crisis, but it's more broadly a global debt crisis. And unfortunately, when you're in a debt crisis, you have a number of different tools at your disposal. One of the tools is to increase the money supply. And so in the United States, the U.S. has dollar-denominated debt. And so it's interesting, in 2012, the Greek economy had euro-denominated debt, which was also tied to the U.S. dollar. So it didn't have its own currency back in that day, and they were threatening to pull out and devalue. And so the United States has effectively been devaluing since they took themselves off of the gold standard in August of 1971. And so whether we like it or not, that's going to happen. And so concomitant to that happening, the president of the United States has made a decision that he's going to use tariff policy as a way to reshore manufacturing into the U.S. And unfortunately, we're just in a different world than the 1890s. He talks about President McKinley and so forth, but that's not the world that we're living in right now. As an example, Boeing, if they're going to make an airplane, it's an American-made product. 60% of the product, the parts and so forth, are coming from outside the United States. There's no flat screens being made in the U.S. right now. We're all talking on flat screens that were likely made in Asia. So we have a disconnection in policy. I understand the president's goals, and some of the goals I actually agree with, but I don't understand the implementation of the policy. So at the same time, you have this debt crisis that we're not going to work on practical solutions to resolve. We're going to knock the entire global economy into a recession. So that's just going to mean a lot of money printing, guys. And so stock market's going to go up, but the real question is it going to go up on real terms? And I would submit to you that it doesn't. And that's the reason why I own things like Bitcoin and gold. I'll turn it over to Mr. Krol, but that's where I am right now.
Yeah, I definitely want to get into Bitcoin and a few other things. I want to talk a little bit about tariffs, but I know this is a broad start, Jiri. I'd love to just invite you from your perch in London there to comment on global market turbulence thus far.
Sure. I also agree this is part of a broader tectonic shift that includes over-indebtedness. I wouldn't necessarily call it a crisis, but over-indebtedness of most of the Western, but also emerging markets world. I mean, China's debt to GDP is enormous for an economy that's still middle income economy. And coupled with that, which isn't a great story for the US, you have a rotation out of the US equity market that has been going gangbusters for the last 10, 15 years, ever since GFC abated, into the rest of the world, but also into some of the alternatives that Anthony mentioned. And so that's creating additional pressure, I would say, not just on the treasuries, but on the dollar itself.
Yeah, that makes a lot of sense. So I asked you to kind of think about how we got here, where we are now. Now I'm going to ask you to break out your crystal ball a little bit. I want to talk more specifically about the tariffs. We've seen Trump, send global markets into chaos with the announcement of these tariffs. He quickly has retreated. He's zigged, he's zagged. Nobody, businesses need certainty to do their planning and figure things out. Anthony, Trump personally, and you're an astute observer of all of these different maneuvers. Can you talk a little bit about the future and how you see this playing out with regards to tariffs and what he might do?
Well, I mean, it's an interesting situation, and I'm going to talk brutally honest to you guys. So he would have done everything that he's doing right now in 2018, but he had a different group of advisors, and they were a much tougher group of advisors, and they were more naysayers there. And so they blocked him. Gary Cohn blocked him, Mnuchin blocked him, and none of the stuff that Trump wanted to do was implemented. And ironically, because Trump is a free market capitalist, let's be fair to him, the economy actually did well, and the stock market rose, and he would have likely gotten reelected but for COVID. And so what's happened now is all those guys got cleared out. They passed a MAGA loyalty test to Donald Trump. And so Trump 2, the staff on board with Trump 2, frankly, are very yes-oriented. There's not a lot of naysayers in that group. And so Donald Trump says, hey, I had this idea from 40 years ago. I put an ad in the New York Times. I'd like to implement that idea right now. I'd like to do that. And so, okay, it's not going to work. The idea doesn't work. And so the question is, will the business community, will the lobbying community, will the people around Washington, the system, will they stop Donald Trump? And so I'll make a prediction here, and I'd love to get both of your reactions. I think they will. I think Jerome Powell has drawn a line in the sand and said, geez, I'm sorry, I'm not going anywhere. You will have to fire me, and you'll have to get me out of here with a crowbar, which I think would be cataclysmic for the markets. The Supreme Court has said, hey, you got to have due process when you deport people. And so I think the system is now closing ranks on him. And so this debacle that got started 23 days ago, I think will end. I think it will get resolved reasonably favorably. But I would submit to everybody listening that damage has been done to the United States because our credibility has been damaged. The predictability of our capital markets has been questioned. And if you don't believe me, just go by the markets. The DAX and the FTSE are outperforming the S&P 500 over the last 24 days since this debacle started. So that's a sign that there's a capital flight here. You know what I mean?
Yeah, absolutely. So usually over to you on that, your view on tariffs, breaking out your crystal ball. What do you think is going to happen? And also feel free to react to Anthony's prediction.
I would agree that it's most likely that we're going to see a retreat from the current stance for a variety of reasons. First of all, there is a strategy which was telegraphed to the world well in advance by the president and the administration, and or actually two strategies, right? There's one where tariffs are used to, and those don't necessarily align, and they're not necessarily consistent. One where tariffs are used to reindustrialize the United States, which means they pretty much have to stay on and be quasi-permanent, and they have to be meaningful. That brings in a lot of the effects that we're starting to see, right? So reshaping of the supply chains that is potentially inflationary and recessionary. The other strategy is the sort of the art of the deal strategy, which is, well, we'll slap on big headline tariffs, and the idea is to get to free trade, to even lower trade barriers. So almost the opposite situation. That might also be difficult because a lot of the barriers indeed are not tariff barriers, but that doesn't mean they're easily done away with. If you think about how Europe or Japan regulate their agricultural markets, I mean, this is a very long dated, culturally based way of looking at a way of life, right? And it's much harder to dismantle the way that you approach agricultural regulation or the use of pesticides or the use of other chemicals than actually changing tariff policy. And the tariffs are low. So if tariffs are low and the other barriers to trade are very, very difficult to dismantle, what's going to be the deal, right? So I think you're then left with the option of, okay, well, let's try to go strategy A and reindustrialize. And that's a transformation of the economy, right? And that does bring pain. And you could say, and it has been said that, okay, it's going to be painful a little bit. And that's the real question. If it's going to be a little bit painful, maybe you can get there. But by all indications, we're seeing that it's not going to be a little bit of pain. It could be a lot of pain, right? I think if the final point is the U.S. democracy or economy might not have a high tolerance for pain, for economic pain. That's part of that kind of transformational process. So I think that will lead to recalibration and potentially some reduction in tariff barriers and a shift more towards the kind of free trade world rather than the sort of the high tariffs and continued trade wars and in the U.S. and the rest of the world.
Anthony, I think you had something there. I'd love to hear your reaction.
Yeah, I'm thinking I want to be measured in how I react because obviously I have a political opinion about Donald Trump, so I want to be as objective as I can as an investor. I think was saying is perfectly analytical. I would just add one thing to it, and I would love to get both of you to react to it. The national pride of these other countries has to be factored into the equation. So if you're calling up the Chinese and saying, I'm going to do 150%, 145% tariffs, and then they look at you and say, well, okay, we know how to starve ourselves. We starved ourselves for 150 years and we had a great famine in the 1960s. No problem. We'll starve ourselves. And since we're a 5,000-year-old country, we'll starve ourselves for 200 years. We'll see you in 2225.
Yeah.
You with me?
I think there's a lot of usually you go ahead and I'll jump in after that.
Absolutely, but I think what we're seeing in the U.S. is also a national pride reaction, which the president has drawn on. I mean, it's one thing to be told in a polite and diplomatic way that you need to increase spending on defense, and be told that 5 times or 7 times. But being told that for 30 years and then being laughed at, also in a very undiplomatic manner, when certain strategic decisions are made that go against the grain of what one would call a sort of an equal partnership. And I'm thinking about this debate in the UN about the Nord Stream pipeline dependence on Russia and that being potentially a dangerous thing. So I think absolutely, I agree. But I think that this is a two-sided thing, and it's being tapped politically on both sides of the debate. For sure.
Absolutely. I find myself agreeing with you guys in large part. And Anthony, I hope you're right about, the pillars of U.S. society coming to restrain a president that seems to be essentially out of control in many ways and just, making decisions by the seat of his pants and everything. So I hope you're right there. I want to stick with the China idea just for a moment. I have a China background, and I'm particularly following that issue because that, he keeps pulling back on tariffs for the rest of the world, but the tariffs on China are high. And now he's, obviously pulled back on certain electronics, and now he's even making noise about reducing the tariffs. And in my eyes, kind of begging the Chinese to come to the table. And the Chinese, I think, usually, as you're alluding to, are going, yeah, no thanks. They have experienced, deprivation in the past. I think the tolerance for suffering is higher, but not limitless. China can explode in popular dissent, and that's happened in the past. So I think that they face significant headwinds with the property bubble, the demographics that are going to come for them. But I wonder if you guys could comment specifically on the world's second largest economy and how this trade war is playing out and where it might go. Usually I'll invite you to comment first this time.
Yeah, sure. I would say that indeed, some of these systems appear very solid until they're not. And some of the messier systems like the democracies appear very messy and very ugly because they're doing their dirty laundry out in public. But they're actually fairly stable because you can have critical conversations, you can have feedback, you can have correction mechanisms. So yes, there is a serious because the grand bargain, right, the CCP has had with populations, we deliver prosperity, and for that, we will have the stability of a one-party rule. Now, the tariffs, people say, Chinese exports to the US 15, max 20%. It's not that big. It's something that can be overcome, and we can find other partners. Well, Europe has already started to slap tariffs on electric vehicles, and the rest of the world will be looking at similar measures, and that's pre these tariffs and pre diversion of trade. So I don't think that the situation is going to be rosy anywhere, right? But this is the lesson of history. Right? Trade wars generally don't have winners.
Yeah, that's fair. Anthony, over to you.
Yeah, I mean, I agree with everything. So it's not really much more I want to add. I think it's a brilliant analysis. I guess the only thing I would say is that there is a way out for America. There are right or wrong, less ideological things to do. America still is 26% of the world's population. I'm sorry, 26% of the world's output, 4 or 5% of the world's population. So it's a very, very rich country. And I would just say that if America took some pages out of the Chinese playbook and said, all right, we're going to have a 15-year plan for right-sizing entitlements, a 20-year plan to fix the deficit, a 25-year plan to fix our infrastructure issues, and we calm down and stop shooting at each other on cable news and said, these are the right things to do for the country, and we just took a deep breath and we did that, I think we'd be very successful. People don't remember Senator Vandenberg, but I'll just remind everybody who he was. He was the Republican majority leader. He was a senator from Ohio, and he's a Republican majority leader at the time of Harry Truman's rise to the presidency. And Truman went to him and said, listen, we can fight with each other, or we can put a plan in place to contain communism, to grow our economy, and to protect the Western liberal democracies. And Vandenberg said, yes, we should do that. And we don't have that right now. But if we had that, we could figure out a way to contain tyrants. We could figure out a way to solve these problems. These problems are very fixable, but they're not fixable the way we're going about it.
And it's not just the U.S. problem, right?
Yeah. This is a systemic issue around the world.
Indeed. It's, I'm a big fan of Neil Howe's fourth turning theory in terms of us living in an era where institutions, existing norms have basically exhausted themselves and are going to be reconfigured and are being reconfigured. And that is a very disruptive process, and it's a very painful process that can sometimes lead to conflict and or horrible war, because one last such fourth turning was during World War II, right? So so it is a dangerous moment, but the positive that one can take from that, which I think Anthony is alluding to, is that there, after the fourth turning, there is a first turning again. There is a renewal. There is a new consensus that is found. And the pessimistic scenario is that there is just a sort of a downward spiral. I don't think there is. I do agree there are ways to fix the issues, fix the problems, but it's going to be painful and disruptive in the meantime, I'd say.
Yeah, but I'm agreeing with both of you, and Anthony, your assessment that what's so frustrating, if you know a bit about these issues, is that we didn't have to go through all this pain. Our politics are so divisive. Everybody understands there's issues with U.S. immigration, with the way NATO members are spending on their defense, on elements of trade. But there's no reason we have to blow up the entire system and create a potential global recession and all sorts of horrible things to fix them. So it's a difficult moment. I have a rather simple question for you guys, but before I move forward, I want to encourage folks, we're already seeing them in the Q&A, to put questions in the Q&A. One popped up in the chat, and I'll try to work that in as well. I'm going to ask questions to Jiri and Anthony for a bit, and then we'll get more specifically to questions, but please do put them in the Q&A. So Jiri, Anthony, I have a simple question to both of you. Are we witnessing the beginning of the end of the dollar as the world's reserve currency? Anthony, if you could share your thoughts first, I'd appreciate it.
No, I don't think so. I'm optimistic about that right at this moment. I don't think so. I mean, there's rumblings about that. I think if you tell me, if you tell me that, again, I want to measure my words because I don't want to come across too political. Jeff Friedman saying he likes the rest is politics, U.S. Thank you, Jeff Friedman. But I don't want to be too political. I want to be objective. I think what would cause the systemic demise of the U.S. dollar is we give up the rule of law in the country. We move to an authoritarian style government where now we have no predictability of the laws. And then you have people that can be taken from the country and moved to foreign prisons at the capricion and the whim of the law enforcement officials being guided by the authoritarian. It's a very interesting case, right? Because I have to explain this because it's tied to economics. Thomas Jefferson said, my body endowed by the Creator gives me inalienable rights. It's not the location that I'm in or my designation as a citizen. I have these inalienable rights, a result of which habeas corpus, I have a right to the body and I have a right to protection and process. And when you say the words due process, think of the word process. So Jeremy can't be the leader and say, hey, Anthony's a member of MS-13. He's got to go. I got to be able to say, well, Jeremy, I'm not a member of MS-13. Here's the tribunal. Here's the evidence. And then the court says, no, well, Jeremy's right. You've got to go. I'm okay with that. Okay. And so when you do that, you weaken the capital markets because the capital markets are relying on the contractual obligations of each other. If I go to buy this piece of real estate I'm looking at, capital markets and common law tell me I own it. Okay. So if you're telling me we're getting rid of that now and we're moving to an authoritarian style government, yes, we're going to lose dollar primacy. It'll take 15 years. It'll be over. They'll find something else. They'll do a basket of commodities. They'll do a stable coin linked to Bitcoin, gold, silver, oil. That'll be it. And we'll start trading on that. It'll take 15 years. But if you're telling me that the U.S. is not going to move to that standard, and the Supreme Court is saying 7-2, they don't want to do that, then I think the U.S., I believe in the U.S., I believe in our self-healing capabilities and our corrective capabilities, that we won't do that. So, and then I know, and I apologize for overspeaking, but just quickly, the Trump stuff is knocking down the tourism. We're going to lose $90 billion of tourism revenues into the U.S. this year. Airlines are already telling you they don't know what the hell is going to happen and how many flights they're going to have to cut as a result of the Trump rhetoric. And again, it's not being political. I'm just looking at the objective numbers of what's happening. Sure. Okay. And then, so will that affect the U.S. dollar? Yes, it already has. We've weakened the U.S. dollar.
Yeah, absolutely. Jiri, would love your thoughts.
Yeah, we'll have to start disagreeing soon, but not a moment for this yet. So there is a desire to weaken the dollar, but I don't think that's something, and we will probably see a weaker dollar because of the outflows that have started even pre-tariff. Again, this rebalance, because the foreigners own, I think, 22 trillion worth of U.S. assets, most of which, or the majority of which, are shares that have, again, delivered massive returns over the last decade. So just to rebalance portfolios away from the dominance on sort of U.S. stocks will create a sustained pressure on the dollar. Might have other aspects that will lead to that, including administration or central bank policy. So that's not to be, again, confused with the dominance of the dollar that that is used for payments, that is used for raising debt. I mean, size of the offshore dollar market is somewhere around 14 trillion, so it's massive. I mean, the world cannot use anything else for the moment, and if the negative scenario Anthony's predicting materialize, I think it might take even more or longer for the world to find an alternative, because there doesn't seem to be another sovereign that could play the same role the way that the U.S. does, right? So,
well, can I interrupt for a second? Let's say that Trump says we got martial law, no 2026 election. And I've canceled the 2028 election. And so now we're not, and I'm going to stay here until I die. Go ahead. Then what?
Sure.
Yeah.
That might change things a bit. But then you could say, all right, again, what is the alternative? Who else in the world is, and this is, I mean, this is just pure speculation, but I'm just trying to play along the scenario. But there are many other countries that have leaders that are there for life, that have their currencies used in trade, and so look, I don't think it will happen, but all I'm trying to say is that the dependency today is so strong, right? That, just the sheer fact that if your debt is denominated in dollars and it will run for the next, 5 to 10 years, you can't redenominate that, right? So those kind of path dependencies are going to be difficult to dislodge no matter what happens, and I don't think that we'll see what Anthony is saying, but
yeah. Well, thanks for that. I actually feel a little bit reassured. I don't know if that'll help me out if I go on vacation in Europe in a few months, but with the dollar being weaker. But
Okay, let me push back because again, I want to be objective. So there's a 0.0% chance of that happening. You're an investor. You're both investors. You have to look at a permutational outcome matrix. And if you had asked me, is Barack Obama going to do that? 0.0% chance. If you'd asked me, is George W. Bush going to do that? That's a 0.0 chance. But Trump has gone down the list. So let's just talk about what he's done. He took out the law firms. He's gone after the media companies. He's got Jeff Bezos, a very rich guy, on his knees, basically in the Oval Office. He's systematically going through the list. And so are we at 0%? I'm not above 10. I'm probably at 5%. So a 1 in 20 possibility. Are we at 0? Are you two guys no chance of that happening?
no, I'm not at 0.
Okay. All right. You're at 0? You're at 0, Jir?
I would be very close to 0.
0, close to 0. Okay, good.
I've been wrong about Trump since 2015, so I've kind of given up.
Okay, good. I would like it to be 0, but there's a lot of weird stuff that's happening.
It's true. It's true. I have we're starting to get some really good questions, and I want to make sure we make some time for them. But as the moderator here, it's my prerogative. I got a couple more questions for you guys that I'm dying to ask. Anthony, I confess I still don't understand cryptocurrency. I have the little book of Bitcoin teed up to read after the little book of hedge funds. Looking forward to that, illuminating me a little bit. But can you just talk a little bit about current market turmoil, your feelings about cryptocurrency, and how it fits in?
Well, it's one of these things you either see it or you don't see it. It's a very binary thing. It took me 6 years to see it. I was introduced to Bitcoin in 2012, and I actually had the opportunity to meet Hal Finney, who was the first person to receive a Bitcoin from a Bitcoin wallet. I didn't understand it. I'm an institutionalist. I'm a traditional investor. I thought it was a bunch of nonsense. I think Bitcoin was at $300 or $400 when I first saw it. I then did a lot of homework on it. By 2018, I became Bitcoin curious, still afraid of it. By 2020, 6-7 months into the pandemic, it dawned on me that this was going to be an asset, and this would actually become an asset class akin to gold. And so it's very hard on a podcast or a seminar like this to describe the whole thing. I did write a book about it called The Little Book of Bitcoin, about my odyssey and others into not seeing it. Saylor called it a bunch of malarkey. Paul Tudor Jones did. Stan Druckenmiller did. Ray Dalio did. I can give you hundreds of people that did. And then all of a sudden, when you see it, you're like, okay, I have to own a piece of that digital property for the future. And so if you believe what I believe, that it's a form of digital gold, that it will trade to the market capitalization of gold over time, particularly as the people that are on this Zoom age out of the society. We're too old for Bitcoin, frankly, but there are 20 and 30-year-old people that are going to be 50 in 20 years, and they're going to be Bitcoiners. And so I believe with M2 growing, I believe with a debt crisis, which if you guys think we're not in a debt crisis, please somebody tell me why, support that for me so I can get comfortable with that. I'll try to understand that. But I see more deficit spending under Trump than under Biden. That's, again, not me saying it, just the empirical data. And so a result of which you're going to start to rely on things that are not going to get devalued as quickly as sovereign currencies. Okay, so that's my pitch.
Okay, so usually we want to encourage disagreement here, right? So if you want to jump in about the debt crisis, please do. And I don't know how much you know about Bitcoin, but feel free to weigh in there as well.
Oh, sure. We have our annual digital assets conference actually today. I stepped out of it, so sadly I won't be able to absorb all the latest trends. But some of the some of the trends that we're seeing, and in great part thanks to the current Trump administration, is a much greater adoption of crypto by institutional investors, and the merging of the crypto or digital assets world with the traditional finance world, where a lot of the technology is used to make the plumbing and the trading in the financial space so much more efficient. People talk about how to improve the government bond repo market, how to bring private assets to the retail investor by using tokenization and allowing them to do what they do with traditional portfolios of more liquid assets, and so forth. So we are big believers in the power of crypto assets and the usefulness. Obviously, there's a whole other aspect to the crypto world, which is not as savory with all the bump and dump schemes, but there is a massive and, in my view, technological value to both Bitcoin and the wider crypto universe. And the next stage really will be the sort of the bringing of some of the real world use cases and applications beyond the ones that are already there, like stablecoins that are helpful in payments, and or in some of the digital or the financial market infrastructure, which over time will become invisible, right? What people are seeing, funny tokens, trading in a volatile manner, that might be a distraction in terms of what might be happening in terms of the real value, which will be probably a lot of ways in which people interact in the digital space called the internet, right? That's the kind of frontier that people are thinking of.
Thanks so much for that. Let's get to a couple more questions here, because I really do want to get to some from the attendees. I want to talk a little bit about multi-strategy hedge funds, okay? Because they seem to be the most popular funds for a while there, offering an even broader sense of kind of diversifying risk and different strategies to take advantage of. But from my understanding, there's been a decline in interest in multi-strategy hedge funds. And, I was hoping you guys could illuminate us a little bit more on how that looks from your perspective. Anthony, if I framed that up adequately, could you tackle that for us?
Wow.
Put you on the spot.
I listen, this is, I would, if it's okay, not that I'm trying to shirk the question, but I'd like to talk about what I'm doing. Is that okay? Because I think that would be more, I think I'm more knowledgeable about what I'm doing, than the more, so I own Bitcoin, and I own 6 or 7 multi-strats. These are guys like Steve Cohen. These are guys like Izzy Englander. These are guys like Paul Singer from Elliott. And I believe that that's the ticket to the promised land. I believe I'm getting equity-like returns from the volatility associated with Bitcoin, but I'm also getting, weirdly, if I'm right, the transition, which frankly we only have 3 weeks of data on, but there's a transition I believe that's going to happen where Bitcoin becomes a risk-off asset over time. And we've only seen that for 3 weeks. So I could be, trust me, I've been humbled by life. I've been humbled by markets. So what I'm saying right now, I could be 100% wrong about. But I think I'm getting equity returns and a transition into a risk-off asset in Bitcoin. And I think it's a 10x over 10 years. And I think these multi-strats, which have done very well since April 2nd, are providing me with a little bit of a softer cut the volatility, if you will. And I'm not allowed to talk about our returns publicly, but the last couple of years since we've started the strategy have been very good for SkyBridge.
Thanks for that. I thought that's very illuminating. I appreciate that. Jiri, what are your thoughts on this area, multi-strategy funds?
Enormously successful businesses, among the most successful businesses in the history of finance.
Am I right, though, that there's been a decline in interest? You guys are the experts here.
I would would ask the question, which ones, right? Because many of these funds are actually closed to new investors. So there are multiple new ones that are being launched, and the track record might be mixed in those, and so people might be disappointed. So again, I am not as close to this as Anthony is. I'm not investor into these funds, but I wouldn't say that if you were given the opportunity to invest with the top 10 of these funds, that you'd say, I'll pass, right? I'll do something. I'll put in my savings account. So
much ado about nothing.
There are sort of trends in sort of investor interest in various strategies, that's for sure. But again, the track record speaks for itself, I think, and they're still very highly desirable in the top managers in this space.
Excellent. Well, we have a bunch of questions here, and I had one more I wanted to ask, but this question is a good kind of straddling point for what I wanted to do next too. The question here is, given the thought that there's a global debt crisis, so apparently someone agrees with you there, Jiri, are distressed funds and private credit funds likely good investments at this time, or is it too early? So I'd love to hear from you guys on that, because I also wanted to talk about private markets, private equity. Anthony, can you start us off there, please?
Say one more time, Jeremy. I'm sorry.
Yeah, I kind of jumped in the middle of the question. So given the thought that there's a global debt crisis, are distressed funds and private credit funds likely good investments at this time, or is it too early?
Look, we're talking about real terms, or we're talking about inflation adjusted, dollar denominated adjusted. This stuff's going to go up. There will be a boom in private debt. There will be a boom in distressed debt because we're going to turn the printer on again. We're going to have a massive print that's going to take place in the next 3 to 5 years, as a result of which stock market's going to go up, these funds will go up, those categories will go up. But then the question is, adjusting for the purchasing power of the US dollar, will these things have gone up? And so I'm not as sure about that, to be totally candid, which is why I own so much Bitcoin. But yes, I'm bullish on all those sectors because of those reasons. So the question is it real purchasing power bullish? And I'm not sure, because what could save us, and this is the great thing about human beings, we think linearly. We see a debt crisis coming, and then all of a sudden AI comes into the mix, and our productivity goes up not one time, but like 19 times. Sure. And all of a sudden we have this great abundance in the population. If we were talking to Tom Malthus in the 1840s, the economist, he said that we were all going to starve because we were going to run out of food. And he left out all the technology. We have more people dying from obesity before Ozempic. We have more people dying from obesity than we did starvation. So I don't want to be the doom and gloom guy, because I know we innovate and I know we transform things. But on the trajectory that we're on right now, I do think that real purchasing power is being weakened by the pump.
Yeah. Well, I don't think about you as doom and gloom, Anthony. I think you're an optimist in many ways, and that's one of the reasons I enjoy following you. But can you comment a little bit on the private equity space, which you write about in the little book of Hedge Funds? What are your thoughts there now?
Well, I mean, the bear case is it's oversaturated, and the bear case is because of the pressure on a lot of these institutions, particularly the college endowments, that a lot of these people are going to be exiting them. And so going to put pressure in those portfolios, and it's potentially going to make things more difficult. The bull case is the one that I am subscribing to, is that I think that the world is still innovating. There's tremendous private companies out there. And I think we are doing a disservice to the American public, because when I was a kid in the 1990s, we were taking things public left and right, and the retail investor was able to participate in things like a Microsoft or participate in something like a Google. But we don't do that anymore because we have so much regulatory restrictions on these companies that most of these companies stay private into the hundreds of billions of dollars of valuation. Look at the SpaceX valuation as an example. That company would have been public 30 years ago under a different regulatory regime. So that's a disservice to the public. But I think the private equity pessimism is overdone. These are some of the smartest people in the world. And there's a tremendous amount of private businesses out there as a result of this overregulation.
Thanks, Anthony. There's actually another good follow-up question after this that we'll come to. But usually, I would love to get your thoughts. Tell me if you want the original question again, and want to hear your.
I mean, on the original question, whether distressed debt as a strategy is one to pile into or not, I guess it will depend on the policy response to any broader stress in the credit markets. If you look at what happened during COVID, the policy response were so swift and overwhelming that the credit markets basically swung back very, very quickly, as well as the equity markets. Rates went down incredibly, and then everybody refinanced themselves at 1%, right? And the distressed funds who were sort of licking their chops or getting ready to be able to pounce on some of these opportunities actually weren't able to, and a lot of that dry powder stayed dry. So all depends on policy response and whether or not there will be tolerance for pain by the central banks and the governments. And there again, we might be at the end of the road in terms of the firepower that the government has, to the point that Anthony makes. The fiscal response that we saw during COVID is unlikely to be repeated, because that could lead to a disaster and the real proper debt crisis, which I don't think we're in yet. And then on the private markets themselves, there is a tremendous growth there, partially driven by some of the regulatory difficulties of staying or becoming public, but partially because it's just a technological solution for a certain thing. So if you can access capital without the going on to a public exchange, and you can participate in it, which is an important point, right? If it becomes just a few very wealthy institutions they're able to access to that, then there's a problem. But if you can have retail access participate directly in private markets, then what would be the issue here, right? If fewer companies go public, for example. And this is what we're working on across the world, creating new retail vehicles that need to be there as a way of providing safeguards to the smaller investor, right? They can't be just the same type of vehicle as a sort of private equity fund or a hedge fund, but properly regulated vehicles with good safeguards that allow you the access to the private markets, I think is the answer to the policy, right? You also want to take care of unnecessary burdens on public companies, for sure. But if the lack of people going public is not driven by regulatory burden, but there are other underlying trends, what you want to do as a policymaker is to make sure that everybody can access the private market. So we are living through that. It's a global thing. It's happening in the US. It's a big discussion with the new SEC. How do we do that? How do we get to a better place from that perspective? But it's going to be a huge discussion in Europe. They have new LTIF vehicles and LTAF vehicles in the UK, as well as Asia. I mean, the Monetary Authority of Singapore, for example, just launched a consultation on exactly this topic. How do we create a fund vehicle that's appropriate for retail investor access to the private market?
Yeah, really interesting. And we're getting towards the finish line here, and I have probably more questions from the attendees than we'll get to because this is so interesting and you guys are fascinating on this. But there's one particular question that's standing out here to me as a nice build on what we're talking about here, which is in part about, erosion of trust, fairness to, retail investors and other things. So this question is, how much insider trading and front running do you think happened around the back and forth tariff announcements? Do you see an erosion of trust in the markets as a result? And do hedge funds pay attention to that dynamic in order to obtain an edge? Anthony, what do you think?
I'm trying to hide under the desk. Let me see if I can hide under the desk and let Krol answer that one. Okay, hold on a second. Okay. I mean, guys, come on. It's absolutely egregious. I would submit to you that we're in the golden age of corruption. They're tipping people off before they do things, and then the people are putting the trades on, bald-faced putting the trades on. Trump, by Bloomberg News' estimate, him and his family made $1 billion off of meme coins. and other shenanigans going into this. You've got the Cantor Fitzgerald guys. So Lutnick's son is now running the operation while his father's the commerce secretary. I mean, come on, guys. Come on, guys. It's not right. You don't have to be a rocket scientist, but this is what these guys do. They know how to boil a frog. Remember, if you take the frog and you put it in cold water and you simmer it, the frog doesn't realize it's going to die. If you put the frog in boiling water, it skips off the top. But these guys, they move on you like this. And slowly and surely, all of a sudden, it's all good. And now Trump is saying, no problem, I'm the president of the United States. If you put money in my meme coin, which we know is a worthless gambling token, if you put money in my meme coin, I'm going to have dinner with you. I mean, give me a blankety blank break, guys. Okay, this is the golden age of corruption, and I think it's corrosive to markets, and it has to be cleaned up. Okay, we can ignore it and we can pretend it's fine until all of a sudden it isn't fine, and the rest of the world's looking at it saying, okay, not a safe place to invest anymore.
Yeah, agreed.
It's absurd, is what it is. You're going to have a meme coin, and the president of the United States made $1 billion off it, and now he's going to invite 220 people to the White House, but they got to invest in his meme coin.
Yeah, absolutely. And that's not to say nothing of the, $1 million a plate dinners that he's regularly hosting in Mar-a-Lago. So
come on, guys. I mean, come on, guys. Come on. Are we really going in this direction as a country? I mean, come on, guys.
Yiji, how do things look in London on this front?
I can possibly comment. I mean, there's a whole bunch of stuff that Anthony mentioned. I think the meme coin stuff is probably something different than what the question was about. But I just don't have enough information about what's been happening in the market with respect to that kind of question. So, and other than to say insider trading is illegal, and all the regulated entities are doing their best to make sure they avoid engaging in this activity.
Got it.
I don't want to be disrespectful or disagree overly, but the meme coin is connected. Right. They're all connected, because when you're pulling bullshit like that on the public and you do what Bannon says, you flood the zone with bullshit, it's hard to distinguish one from the other. And it helps them with the smoke screens to get away with the shit that they're pulling.
Yep.
Okay.
Yep.
Sorry.
Plain spoken, Anthony. I appreciate that. Okay. We're going to do one more question. Then
I would love. You want to defend the meme coin? Because I would be fucking great.
No,
I would love to hear the fucking defense of the meme coin. So go ahead.
I'm not defending it. I felt the question was slightly different in relation to that, right? Okay. So
all right. Oh no, I would love to hear the defense of the meme coin. This is this is what makes the show entertaining.
I'm jumping in here as well, because as a fraud investigator, and at the end of the day, what do we do as a firm? We investigate fraud, and we've worked on everyone from the Madoffs of the world to 1MDB, you name it. As a firm, we've worked these frauds. I have to agree with Anthony, and I would just say, I mean, it's happening so blatantly and so openly and so egregiously that it's almost, I mean, it's breathtaking in what's happening. And I'd like to say it's a new thing, but this is the type of actions and activities we've seen for quite some time. It's really nothing new at the end of the day. Just it's a new coin or a new extension of that. So these are heady times, and I guess if we're going to sum it up, the new age of fraud and new age of scams and scandals, that's where we are today.
Yeah, I totally agree. Final thoughts from me. We're at the finish line here, but I just really want to thank Yiji and Anthony. This was an incredible discussion. We're very lucky to have you both. I want to encourage everybody to take a look at Anthony's books, the Little Book of Hedge Funds, Little Book of Bitcoin. They're super helpful in understanding all of these things. Follow and listen to Anthony's different podcasts. Get to know Yiji's group, AIMA. They do essential work. If you're an investor, go to their conferences, get to know what they're doing. You'll make better decisions. This webinar will be available if you want to view this. Again, the recording will be made available. All of you should get an email in the coming days with those details. And As Don noted, we'll have our final webinar installment on June 4th is the planned date, with Mark Sullivan, the former director of the Secret Service, talking about the many threats that executives and celebrities and other high-profile individuals face in these divisive times. Don will be on as well as an expert in preventing these types of attacks and monitoring them and thinking of them. So we hope to have you then. Don, any final thoughts from you?
Well, after this discussion, I think we have some new enemies out there, or just reinvigorated the ones we've already had. But
as Franklin Roosevelt said, I want to be defined by my enemies, Don. Okay, I want enemies. So I mean, and by the way, if you don't have enemies, you're not living. Okay, you gotta have a couple enemies out there.
I agree with that. Amen to that. And on that note, let's all hide under our desks and, watch the flak. But again, I appreciate everyone for joining with us, and we'll distribute this recording to everybody, and we look forward to seeing you at the next one. Thanks all.
Good to be on with you guys. Thank you for having me. I really enjoyed it.
Same here.
Thank you very much.